Hi, I'm Tom Lydon, editor of ETF Trends, here in Hollywood, Florida at the Inside ETF conference. And I'm here with Jonathan Stanley, who's Managing Director and Portfolio Manager for Newfleet Asset Management. Great seeing you, Jonathan.
Thanks for having me, Tom.
So you folks are the sub-advisor for the Virtus ETFs, correct?
That's correct.
Yeah, and really you specialize in active fixed income. So why active fixed income now? What did advisors really need to be thinking about when they look at that type of strategy?
Sure, active management is, we think, very powerful. If you look, when people think of the bond market, they think of agency mortgage backs and US Treasuries. We make our money in all the core, or non-core, but satellite sectors, such as high yield, leveraged loans, emerging markets. That's where we think we can make a lot of money for our investors.
So with that strategy, I mean, a lot of advisors, especially who have shifted over to long-only, pure beta income strategies, it's really worked out fine for them for many, many, many years. Is the environment going to change? Is that why they need to consider that shift?
We think so. We think we've been in a bull market for the last 30 years, driven by primarily Treasury rates. We think now that there's the potential for rates to increase. We think you have to be cognizant of not only credit risk, but interest rate risk, and that's what we do well at Newfleet.
Yeah, so we saw, in end of 15, we saw a hike. We saw a hike at the end of 16. Are we going to actually see that many more where we need to be concerned about rising rates?
Well, I think the potential is there for maybe 3 interest rate increases. In our in-house, we think there'll be 2 increases, okay. But a lot will be heavily dependent on what goes on with the U.S. economy and how many things that Trump does as far as getting the U.S. economy gaining steam.
As you look at inflation, is that a big concern right now?
It is a little bit.
Yeah.
We're starting to see a pickup in wage growth, which is a primary driver of inflation, but so far it's still right around that 2% rate that the Fed has been looking at.
Yeah. So there are more and more active ETF strategies out there, especially in the fixed income side. What's different about Newfleet? How do you folks set yourself apart?
Sure. We've been doing multi-sector investing for the past 2 decades. So what that means is that we look across the different sectors of the bond market. We look at sectors that are rich versus sectors that are cheap. We're constantly looking at relative value between all 14 sectors of the bond market, and we rotate in between the sectors that we find most value.
Yeah, excellent. Well, Jonathan, great seeing you. Thanks for coming by.
Thanks for having me.